Hey Crypto Kids, and welcome back to another video. In today's video, we're going to be jumping into the price of Bitcoin because we ended up breaking bullish from, well, the bull flag. And of course, we had a trade set in. So I'll discuss what I did with that and what I think is going to happen to Bitcoin in the upcoming hours, days, and weeks. So for that, and of course, I'll actually hint what I'm going to talk about. So this is very interesting. You know how I talked about the VanEck article about Bitcoin predictions, the top 15 Bitcoin predictions and crypto markets in general? Well, it goes much deeper, and I spent the entirety of last night actually researching and preparing this thread onto the Bitcoin chart. So what happened was Bitcoin broke up all the way to $44,700, which was the all-time high for this year. It was incredibly bullish, and everybody ended up longing, and we could tell that by the funding rates. So I was very also cautious about the liquidations, which we saw at exactly 44.5 to $44,700. And I mentioned in my free Telegram channel that I was looking out for that. So we can see here that all of those hundreds of millions of dollars got liquidated. And that's why after we also formed this double top, I exited this position just over break even at $44,130, and we opened it at $44,100. So I am out. And I am waiting for somewhat of a reversal towards the downside. The reason being is because Bitcoin has been going up for 8 consecutive candles, and next week's candle is going to be very important. And look, every single time that Bitcoin sees these massive increases towards the upside, we tend to have a 25 to a 30% drop. So, such as this one in 2020, we had 7 consecutive green candles, we had a red candle, we continued increasing, but Bitcoin saw a drop down by around 31% at its peak, and towards the bull market bear market line, which I like to call the $31,000 line, we saw a drop to 25%. Now, following that, after another increase towards the upside, we fell back down to critical support, which we're trading at right now, finding resistance at 43,200. We saw another $25,000, 25% drop. Then we saw another 25% drop after a big, well, actually a 20% drop after a big increase here too. So the gist of it is that Bitcoin likes these 20 to 25% decreases towards the downside to important levels of support. So if the next candle starts trading in the red, Bitcoin can be expected to first drop to potentially $36,000 and then maybe to even $31,000, which would be testing the phenomenal level of support and continue heading towards the upside. So the only trades that I'm looking at setting at the current moment in time is going to be opening long positions at 36 with take profits at $90,000 to $95,000, my bull market top prediction. And I'll also open this at 31K too with stop losses. I'll probably make a big video on this later on. I actually did have a bunch of limit orders. I don't know what happened to them. I think I have to open them again, but I will make a separate video explaining this in a bit more detail. So make sure to watch, well, the future videos, turn on the notification bell to be up to date with every single video that I post, because there are times that they are very important and time sensitive, so you may as well watch all of them. But yeah, this is what I'm looking at in a Bitcoin technical analysis perspective. Of course, we talked about this post the halving after around, well, 220 days, so 11 months, basically 11 to 10 months. Bitcoin ends up testing the all-time high once again. So yeah, around actually 10 to 11 months, Bitcoin ends up coming back to the all-time high, and this is expected in next year, October. So that's another interesting thing to point out over there if you missed it in the previous videos. But going back to the Brave browser, and before I forget, actually, I want to claim, did I claim my flex points for today? Yes, I think I claimed my daily flex points, and I'm actually saving up. So basically, if you missed it also yesterday's video, you can complete different missions. There are daily missions, there are deposit tasks, spot trading tasks. I completed a lot of the derivatives ones and claimed a bunch of flex points. You can basically claim these on Bitflex, and then you can redeem it for rebates on your trading commissions. You can get trading, you can get like vouchers for trading, and on top of that, you can go to the Flex shop and actually redeem materialistic items. So I am saving for an iPhone, because 2 days ago I actually shattered the glass behind my phone, and that's gonna be 280,000 flex points. So let's see if I can save it up for I can't speak. Save up for that. But yeah, if you want to try this out, you can head over to the description below and sign up using my link. Honestly, I've never seen this on any crypto exchange before, and it's super fun and rewarding at the same time. So sign up, check it out. It takes around 20 seconds, so nothing at all. But going into the thread that I wanted to discuss, which took me all of last night to do. So VanEck is the 11th largest ETF issuer in the United States. So we can see that over here. It's just below ProShares and WisdomTree. And whatever they say, I'm actually going to take seriously, right? And they were super bullish in crypto overall. The most important points were that Van Eck still expects a recession in the United States because media is now outlining the phrase soft landing too many times, which commonly occurs before an official recession is confirmed. So I went back on Google, searched between 2006 and 2007 November, because in December onwards until the end of 2008, of course, we had the massive financial recession across the world. And look at that. IMF, Financial Times, New York Times, Reuters, they're all saying that the US is on track for a soft landing, right? And guess what? Now we're seeing the exact same articles pop up yet again. And well, it could mean that the United States is due in for a recession. In fact, the probability of a recession in 2024 are at levels only seen twice since the 1960s, and both ended in severe economic depression. That's another metric supporting the argument. Let's see what happens there. And of course, the United States elections is going to take place next year too. So next year is going to be pretty chaotic. Now, the second one was they were saying that Bitcoin and gold have similar characteristics, and it could be an alternative asset for a hedge against inflation. And we can see here on the chart that, well, Bitcoin and gold have been pretty correspondent in increases and decreases in prices, especially in the past couple of months. And I think Bitcoin is moving away from a tech stock and now actually being traded as a hedge against inflation, what it deserves to be, right? So that is another very, very bullish sign. And they compare the metrics with the BlackRock Gold ETF that was launched back in 2004 and the price impact that it had on it. And we've never been to those levels ever again for gold. So basically, after the ETF is launched, hopefully in January by BlackRock and all the other issuers, they're expecting in the macro that Bitcoin does end up going pretty high, and they're expecting around $2.4 billion worth of capital to flow in the first quarter of 2024. Notice that it's not like hundreds of billions of dollars, but it's enough, right? It's enough because it was clearly enough for gold too. And yeah, it's looking pretty bullish. In fact, gold saw a $1 billion inflow, I think, but adjusted to inflation and the value of money now, it comes to about $2.4 billion. Now, the fourth point is looking at the Bitcoin halving. Now, after the halving, of course, the new coin issuance is going to be cut in half, and this will cause many unprofitable miners to diminish their holdings and potentially creating some selling pressure. Now, if we jump back onto the chart, I think the point where we see the selling pressure is going to be between $48,000 and $50,000, where we also have the Fibonacci golden pocket in this range too. So after the halving, we may see a small dump, but I think it's going to be bought up pretty quickly because we're going to be, of course, in the post-halving and heading towards a new all-time high. That was the fourth point. And in the fifth point, we can see that, well, they're actually expecting a new all-time high in November 9th of next year, which also correlates with this chart that I showed earlier on the video. And the reason for this is because exactly 3 years after its Bitcoin top back in 2017, sorry, so in 2020, right, we saw a top for Bitcoin. And exactly 3 years prior to that, we had the November 2017 top. And, you know, I always say on my channel that history never repeats exactly, but it pretty much follows it along. It could be interesting to see if we have these tops in every 3 years, and it kind of matches with the cycles too. So that would be an interesting one to see, and let's actually observe if the Bitcoin top comes in next year in November the 9th, but I'm personally expecting it to be in 2025. The sixth point looks at its Ethereum predictions. They think that Ethereum will not it will not outperform Bitcoin, and it will continue surging only after the halving happens itself alongside other altcoins too, and that they say Ethereum will lose some market share to other smart contract platforms such as Solana. But good news for NFT bulls, because the NFTs, the NFT massive craze will probably be back. And I agree with this because NFTs have massive utility. It's such an amazing concept. Maybe not the JPEGs itself, but the consumer blockchain it's really being used with NFTs. There are so many watch brands that I know still have NFT projects in development, and they're not launching it simply because, of the kind of thing we have going on, saying that NFTs, oh, they've kind of fads, they're a massive fad. But I don't think this is the situation. I think NFTs will be back, and they'll be back stronger. It was too early of an invention for its time. What it came out in 2017, so that's only like 5 years ago. I think NFTs will be pretty big, and I'll probably do a video on this later on too, just looking at NFTs itself. And they're bullish on the Bitcoin ordinals and other layer twos, such as Stacks. I'm very bullish on Stacks, by the way. It's probably in one of my top altcoin picks. I have some Stacks. Now, 8 out of 15 suggest that Binance will lose their number one position for spot trading by volume due to the consequences of their settlement, and the ETFs will take over this position because they will offer very, very little spreads and, in fact, 0% commissions at many other brokerages. And they're saying that USDC will actually take over USDT because more institutions will reveal a preference for stables, Circle stablecoin instead. And I've talked about this actually in a detailed video a long, long time ago, back in, like, I think it was a year ago now, after the FTX situation, when we were seeing a lot of depegs with USDT and USDC, because the USDT reserves, they're not really audited that much, that thoroughly. Yes, there is some level of auditing, but the reserves are a little bit questionable. Same with Circle, to be honest, but it's at least a bit more better when you compare them together. So I always like to hold USDC over USDT. And yes, USDT has decoupled more drastically compared to USDC. So yeah, that's an interesting point. Now, 10 out of 15, it's looking at DEXs and how DEXs will probably reach new all-time highs in terms of volume as well. I agree with this. I think DEXs do have a long way to go, and DeFi in general is very bullish in my opinion. And Bitcoin layer 2s in the Lightning Network will be a massive trend next year, 100%. I think the Lightning Network, it has so much potential, although I don't like it too much because it's well, I'll probably explain that later on. It is good, but it has its flaws. If they manage to make new L2s that can resolve this issue, then I think Bitcoin will go into mass adoption. Now, this is probably the one that I agree with the most, and it's talking about blockchain gaming and GameFi overall, because I think it will see a massive run. I think the next billion users in crypto will be coming through GameFi and blockchain-based games, and they're saying that there are multiple AAA games that are set to release in 2024 that have over hundreds of millions of dollars in funding, and they may be very well on Epic Games or Steam. So that will cause the next $1 billion, not $1 billion, but billions of people, the next billion people, to hop onto the crypto train. And I'm extremely bullish in GameFi. And as a matter of fact, Medieval Empires, which is a game that I love and I actually play on a daily basis, it had a drastic move towards the upside. We went up by 45% in the past 24 hours. So if there are any me holders out there, congratulations. And sorry, I am sick, as I mentioned, so apologies for my voice, and my nose is a bit runny. But let's jump back into the thread. We're almost there. 13 out of 15. This is very interesting. So this is a project called Hive Mapper that is apparently a direct competitor to Google Maps. And Google Maps they generate over $11 billion annually. And it's so interesting. They're selling these devices for like truck drivers or anyone, and you could just put it on your dashboard. It just maps out the surroundings, and it uploads it to the database. And in exchange for that, you earn honey tokens. And of course, they profit off of the situation clearly, as we can see that Google Maps has created $11 billion annually. And I think it's a massive business model, and it could be very, very successful. So I'm personally looking into the Hive Mapper project, and I will actually be buying some honey tokens, which did already like 1,106% in the last month. So maybe I'm a little late, but yeah, I'll have a look into it anyways. I think it's a pretty interesting project overall from what I've seen. And if we scroll back all the way down, we can see that over here, they're bullish on helium. I don't agree with this too much. I don't like helium myself, but it is an interesting project for sure. And Coinbase is very interestingly the first public company to report over $100 million in annual revenues from its layer 2 blockchain base, right? So this impacts corporate Bitcoin preference. And in the next 2 years, major financial institutions may announce their own quasi blockchains due to the significant potential earnings. So if Coinbase has made over $100 million in 1 year from Base protocol, I think a lot of big institutions that are even non-crypto may launch their own blockchains just to profit off of this. And this will bring a lot of institutional demand for crypto and Bitcoin overall. And I think that is amazing. And the last thing was saying thank you for reading and make sure to share it with your friends. I will leave a link to this thread below. And guys, it would be very much appreciated if you did share it and leave it a like. It would be awesome. But guys, thank you so much for watching the video. That was a very quick video. And yeah, hope to see you guys very soon. So guys, take care and I'll see you all on the next update. Bye-bye.